Good afternoon. This is Chris Robinson, Robinson Ag Marketing with today's post-close grain and livestock comments for today, the 10th day of November. Well, get right to it. For the fifth time in 6 days, beans are back on challenging those 16, 17-month highs. We've had a lot of whipsaw here, around a 30-cent trading range in the last 4 or 5 days. One day the bulls are patting themselves on the neck. The next day the bears are celebrating. I think it's all going to come down to Friday's USDA report. Any way you cut it, if you're a producer, I think you need to protect or reward, do something to reward the fact that we're $1.12, $1.15 higher than we were a month ago. Again, I just can't say that enough. Even if I was long a bunch of futures, right? Suppose a month ago I had bought 200 contracts and then you're up here, you're up over $1 million, right? You need to hedge that rally. Why let a chunk of that go away? I don't understand. So you either use the weekly options, which I think is a great setup right now. You can do a weekly option, which expires Friday on the close. The report comes out at 11. You can get an option that expires Friday, or you can get an extra week on top of that. I mean, honestly, you can pick any day of the week you want to have the option expire, but that's how you manage your risk. And so many people waste so much time. Um, it's like trying to win an argument with somebody in your family. It's like I get it. You're farmers, you're producers, you're always bullish. Um, I'd rather reward the rally and take all that revenue that we just picked up for whatever reason. Uh, I'd rather make sure that we reward that rally and defend that revenue. So many people, I think, and this is just human nature. You need to be right. You need to feel right. You need to feel like you won the argument. To me, that's absurd. This is about making money, defending money, and however you get there. I don't care if you get there because you dump a box of toothpicks on the floor, and there's a number there that tells you whether to buy or sell. Whatever it is that makes you make your decisions, whatever it is that makes you feel good about your position, I could care less. We're here to manage risk. So, on that note, March corn finishes up 2.5 cents at 4.44. So, with all this big moves in beans, poor March corn still can't get above 4.50. Uh, Again, January beans today finished up 13 cents, 11.30. Not quite on its highs. The high was 11.32. But if you look at jam beans, that to me is an opportunity. You go back to where we were just on um, October 1st, we were at 10.12. The last time I checked, 11.30 is a lot better than 10.12. And now, are we going to take out 11.37? I sure hope so. I hope we go to $16. Whatever your wildest bullish dreams are, I'm all in. But from a business standpoint, if I'm a producer, we've slugged through 2.5 terrible years, and we've just come off a month ago where people were worried about beans with an 8 in front of them. Defend that rally. Okay, there's a whole lot of risk ahead against, and I just can't repeat that enough. Defend the rally, and if you do make cash sales here, like we've recommended, because at the end of the day, unless you're going to store your beans forever or whatever your plan is, you can absolutely positively stay in the game if you're convinced that we're going to have another $1.25 rally in the next month or next 3 or 4 months. You do that with a call option. And I'd rather do that where I've got a defined risk reward. You buy the call option, you can't lose any more than what you pay for the option. If you sell the cash grain and then you buy the board, you could turn a very good cash sale into a disaster if you're long beans on the board and beans drop. What if they gave back half of what they just rallied? We just rallied $1.12. What if you make a cash sale, then you buy the board, and then we break 60 cents? You just given away half of a really good cash sale. And yeah, I've seen that happen time and time and time again. And so the only way to defend that, in my opinion, is to have risk management strategies there in place where you can have a defined cost for your hedge for a defined period of time, and then sit back and be more comfortable with your position. March Chicago wheat, KC wheat, all higher across the board. If you look at the March soft red winter wheat. I'll focus on these. It finished the day at 535 and 3/4. Same idea. We just had a 63-cent rally off 5-year lows. Now we've given back how much of that? About 38%. We were there on Friday and then again earlier this morning. So that little 38% retracement area is a pivot to watch. But it's the same. The math holds true there as well. We're sitting here at 535. Nobody was happy when we were down at 594 at that contract low. Excuse me, 492. So 492 even today at 535. That's 40 cents. Why give away 40 cents? So set a hedge, hold on to your bushels. Most of you, I think, are storing wheat. That would be my suggestion there as well. And the same idea holds. You could do something for a week or two if that fits in better with your marketing plan. And remember, the less time you pay for, the less coverage you have, the cheaper it is. And then finish it up with the protein complex. Well, we went from 4-month lows and it's over a $60, $63 haircut in feeders to a day where we came in and we were limit bid again. Some people think that if you look at that Jan contract, they want to go up and take a shot at that. There's a gap up there above 340. We finished today at 328, 329. The gap starts getting filled around 340.5 and then doesn't get completely filled. So wait for it. 348 and change, 348.175. So just like being long the grains, we want, if you own cattle, you want cattle to go back up to 370, 380 in Jan feeders, right? So make sure that you're managing your risk there. We did have a tremendous sell-off from 380 to 311 and change, nearly a $70 haircut. And we gave back a huge percentage of the previous rally. We started out, if you look at the January contract, February, we were down at 255, right? We topped out at, just call it 379, 380. Lo and behold, that low, 317.8, that area, that was a halfway back move. We sat there for 3 days. So now we've had a bounce. Hopefully we continue to bounce higher. But that was an opportunity. And for anybody that's working with me, we did try aggressively to try and roll down any hedges we had where we were able to do it. So lean hogs, same idea. We had a huge correction after hitting 4-month lows on Friday and really looking like we could possibly even take out more. If you take the move that we had in these hogs, we found support right at the halfway back move of the entire rally. We started the rally back in April, sub 67 cents. We had a rally all the way up to 90, 91.52, that area there. And then, it took us not a very long time, just a matter of weeks to get back half of that. Now we've bounced. So it was an opportunity to take profits on puts if you had them on the books. But again, it's just like right now, if you told me you're bullish beans, great. If you're long animals in the pen, of course you're bullish. You're always going to be bullish. Let's manage that risk and let's keep the upside open here. I would say this: if I was a producer who just in the last week or two, actually in the last 4 or 5 days, if you sold into that rally because you had to, it's absolutely positively makes sense to re-own them with a cheap call because we could absolutely run back up there, especially now that we've got that target that people are looking at. I think you're going to start hearing more and more people talk about, can we go fill that gap in feeders? And so that's something I'll be looking for here for the rest of the week. If you want to get my levels, sign up, robinsonagmarketing.com. I send levels out every day. I do a big, long weekly outlook, which I just finished Saturday. So you had all weekend to look at it. You could see the levels that we were looking at. Moving ahead now, I think the biggest risk is the Friday USDA report. And again, get your risk on paper. It's okay to have an opinion. Everybody has an opinion, but don't let your opinion cut your Achilles tendon. Have a good rest of the day.